Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't, and just remember the disclaimer nothing should be construed as financial investment advice. My thoughts, my opinions. If you are going to invest, consult a professional advisor. And more disclaimers below. Read both of them. So anyway, let's get into today's stuff. Very interesting stuff. I'm going to go over Friday's data real quick. And this is what I'm talking about. The stock markets, they're in euphoria. They can talk about all they want to show how hyper focused they are on trade. Durable goods orders, that was down 9.3%. A little bit below consensus, but this is not, but above the forecast. This is not good data. Look at durable goods minus transportation. That was up 2%, but durable goods orders getting rid of defense spending, which is most of government spending, down 9.4%. Non-defense goods down 7%. Very bad data. Durable goods orders down 9%. So this is really this is not a sign of a good economy. They're so hyper focused on trade that they priced in ridiculous amounts of tariffs, like 200, 300% tariffs. They're literally pricing uh, getting rid of trade altogether, which if you looked at, Donald's first term, all his trade deal with Mexico and Canada was NAFTA rebranded. So he's not going to do, and these new deals, they're all bad deals. They're not going to really help bring back manufacturing or anything. Best example is the EU, where like they're buying military equipment of ours, and uh, all it is forcing governments to buy company stuff. It's not really beneficial to Americans or anything else. So, all bad deals. And you can see the economy, it's tanking and it's going worse. The markets are soon going to follow, just not this year. So let's get rid of, you can see the data. It's not because of, and the reason I bring this up, in 2013, the data actually looked strong on paper. No one believed it. But they had, in 2013, they had this like fake recovery story where they're like, we are in recovery. And that's when I realized like a lot of these because this is during Obama's presidency, and I realized like the BS between the whole fake left right thing. Because if these business channels like Fox really didn't like Barack, then why were they spouting the recovery narrative, hook, line, and sinker? So, but yeah, you can tell, and same thing with Trump. If these liberal outlets really thought Trump was bad and everything, why are they spouting the whole economy's doing well story and everything? Because at the end of the day, it's all one circle, you know what? But anyway, here it is. Show how bad the housing market is. Trump weighing effort to remove capital gains taxes, which this won't do anything good long term because a lot of these people are old people who bought in the 80s and 90s. And because the capital gains, because they bought houses that are like $20,000 and now they're 400 to $1 million or even 2 million. So the capital gains are astronomically high. Uh, But so I don't think all it was they would sell houses, and a lot of these people are close to dying out. So there would be a temporary boost, but it wouldn't really change because people would inherit the homes 5 years later and then just sell them anyway. So, uh, but yeah, that's all it is. So yeah, exclude 250,000 from capital gains tax. So as you can tell, this wouldn't benefit most Americans. This one really, I don't even think it would help. It would just be like sort of like a sniffing coke, like sugar high or sugar high. But I mean, temporarily relieve the market, though. I'm not delusional. Uh, but to show how bad this is going to be even worse, this is just a long term, not markets, but U.S. youth unemployment crisis driven almost entirely by young men. No country for young men. So this is a really bad thing. And I don't care if it's forcing businesses to hire them and keep them. We need to give young men hope in this society. It's not happening. Not even just young men, just people my age. I don't consider myself young, but look at this rising unemployment. It's not even going towards women, it's going towards men right here. So this is a tragedy. And I mean, uh, and look at this young male college grads are now jobless, same rate as college grads. So yeah, these young men, I mean, there needs to be something for them. I don't know what it is. Uh, but there needs to be something. I don't know what it is exactly. I mean, I'm not talking about the basic bitch. Yeah, we need tax cuts and free markets and all. Like, if you think those even ever existed, it needs to be some sort of program or whatnot. The best thing to do is asset price deflation. That wouldn't specifically target young men, but that would make homes more affordable again. Stop propping up all these the financializations. I think they should get rid of a lot of these. I mean, I'm not going to say too much because there's a lot of other things I would do, but I wouldn't. It's beyond the scope. But a lot of these stupid licenses. I used to be a precious metals broker. You don't. If you want to go sell stocks, you shouldn't need the Series 7 or anything. They should do away with all that. The CPA, all that stuff. Get rid of them. Don't need them. There's no point in them. So I would get rid of, if I was making, I'd get rid of all those licenses. Every financial and accounting licenses, I would get rid of it. Just need a basic 4-year degree, and that's it. And from an accredited university. Once you have that, you're fine. Uh, so anyway, show how bad. Speaking of the crisis, 5 million student loans in default as repayments resume. So this is why lower rates is not going to work. Because when you have damaged credit scores, people can't take advantage of these low rates. And they're under the guise that people are going to take care of. Now, businesses borrow directly from the Fed, but they're not going to hire anyone. So 5 million will be in default. So as of 2023, student loan is being collected again. Many borrowers find it difficult to restart those payments due to inflation and uncertain economy. Now, the thing is, these people who weren't paying student loans, what do you think they were doing? They were paying rent. It was an indirect subsidy to a lot of corporate businesses. This is coming down. So you're going to see more evictions, unfortunately. People are not going to go to restaurants and whatever as much. So businesses are going to lose customers, and it's already showing up in the data. The data you saw the durable goods orders, that's negative. It's not good. Eventually it's going to hit sentiment. So yeah, this is a student loan bubble. And if you don't believe me, look at this. Retail collapse reaches historic peak. 15,000 stores gone in the first half of 2025 alone. Retail collapse, 15,000 stores. It's a lot of jobs. Even if they're people's second or third jobs, that's a car payment. I've had to work some of these second or third jobs. I was a uh, server one time, and the money I made from serving on weekends paid for my car payment a couple of years ago. So yeah, that is, and not that some people that are servers or whatnot, they learn the business, they learn the logistics, and then they go start their own. Where it's a restaurant or something else like that. So this is pretty bad. And now I talk about the auto loans, and there was this video. So I Googled because I couldn't, the video was now taken down. Auto loan delinquencies highest level in 15 years. So this is AI, Google AI. And here it is. Auto loan delinquencies in the US have reached highest level in 15 years, nearing those during the Great Recession. So the auto loans are like are as bad as '08. At least 5% are past 90 days due. 5.1% are delinquent on at least one account. And look at this. The rise is broad based. Remember what I said? You're only as strong as your weakest link. Broad based across credit scores and income levels. So it's broad based. It's not just the poor or the working poor, like they say. Now, subprime and near prime are disproportionately effective. So, so loans originated in 2022 and 2023 are appreciate steeper delinquency. So, as you can tell, the auto loans, this is getting bad, and there's a lot of banks. Let's look at ChatGPT. There's a lot of banks. We'll do this in real time, so we'll see if I'm right. We'll ask AI since the media says AI is all knowing. Shoot. Stay logged out. Are many banks uh, exposed to auto loans? See what ChatGPT says. I didn't pre-do this. So yes, many banks have exposure to auto loans. The level of exposure and associated by risk of varies. Level of exposure and associated risks vary by institution. So that varies by the breakdown. So here are the banks: Capital One, Ally Financial, other major banks: J.P. Morgan, Wells Fargo. Look at this. Delinquencies have steadily risen over recent quarters. Outliers like Crescent Bank had delinquency rates of 20%, making auto loans over 90% of their total lending. So, yes, many large banks are exposed substantially to auto loans. So there you go. So there you go. This is a big thing with the banks. So other thing, buy now, pay later in the US, they're set to a record high. So this is another thing that's really going to hurt people. Buy now, pay later. Yeah, 2019 was barely there. See, when with worsening credit scores, people aren't going to be able to do this. And then here it is. This one thing, I think just the reason why I think this has happened, we know cigarettes are bad, so why are people starting to smoke again? I think there's so much no smoking. I don't want to use the word propaganda, but there's a big campaign just since basically since the 50s or 60s, I forget exactly when, about not smoking, about how it's horrible for you and whatever. And I think the reason people are smoking now is they've lost trust in the system. And so when the system's telling them never smoke, never smoke, never smoke, never smoke, they're thinking, you know what? They lie to us about everything. Why do you think we should be? What makes us think that, they're telling us the truth about smoking? I've known, like, my grandfather lived till he was 89. He smoked a pack a day. I'm not, I don't smoke. I love cigars, but I quit cigars. I do smoke cigars every now and again, but I'm not endorsing smoking. I think it's bad for you. And I think people shouldn't smoke. But I can see why people wouldn't believe it. And so when I say, my grandfather smoked, I'm just saying I think people have similar stories to mine, and they're thinking, I had grandparents who smoked. every day and they live till they're 88 or 89 or how bad is smoking really? They've lied to us. So I can see why people are starting to doubt why it's bad. So, but yeah, a lot of smoking's making a comeback. I think another reason is stress relieving. People, it's also an excuse to get out of work. Like, yeah, I'm gonna go on a smoke break. It's also an excuse. Like, if you go to a place now, tensions are heating, you just go out and have a smoke break. Or, a lot of people have broken families, so if they have a family get together, they don't really want to speak to their family. They can just say, "Oh yeah, I'm going to have a smoke break." So, I think there's a lot of reasons people are, in my opinion, are smoking again. But here is mistrust of our institution is why smoking's coming back. And I think that is a big part. I think that is. So let's get back to economics. Top economist sounds the alarm even louder on housing market. Says home builders are giving up. I've been covering this. This is big. Moody's Analytics chief economist says he thinks the red flare is more appropriate for housing. Uh, Said unless mortgage rates come down substantially, home sales, home building prices will slump. Now he is right that home they will slump, but it's if home unless home prices come down substantially. It's not mortgage rates that are the problem. It is home sales. And not that, mortgage rates, even if the Fed goes to zero, mortgage rates aren't coming down because the long end of the curve is still going to go up because of the reckless fiscal spending and they're not going to cut it because what makes a sound is like cutting Social Security, Medicare, cutting off their foreign lobbyists like foreign aid, uh, military spending, defense spending, policemen. Like there's a lot. Those are things that have to be cut, which they're not going to cut. So the spending is going to continue. Look, as home sales are already depressed, but home builders are providing rate buy downs and been propping sales up. They are giving up. It's simply too expensive. I agree. And to show inflation's going to come back, Hershey, they're increasing candy prices by double digits. And they even say it's because of cocoa rising, not because of tariffs. Tariffs are not inflationary. This price change will be a low double digit increase. So there it is. Kit Kat, Hershey Kisses, Reese's. Look at this. Change is not related to tariffs or trade policies. See, the truth will come out eventually. And if you've been watching this channel, I said tariffs are not inflationary. And you're starting to see that. I would love to go into expose on that, but I'm not doing that right now. And these are short videos. And then this is the other thing, just to show how corrupt our everything is, big business and everything. This is why I'm not. Look at this. Microsoft knew SharePoint security was flawed, but failed to patch it. They didn't care. They didn't really. They didn't really. And the sad thing is, these companies they're going to foreign governments too. Uh, Look at this. Hacker at competition in May. So there was a hacker in the competition that made. I know it says something different, but I just don't believe them. That they identified a hacker and did not. I don't believe them. Someone hacked it. I mean, I could be wrong, but remains unclear who's behind the spy effort. So it says two Chinese hacking groups. I don't know who it is. Uh, well, yeah, that's the thing. They had they yeah, that's the thing. This is business nowadays. They knew the SharePoint security flaw, but they don't know how to patch it. So anyway, gold I think still in correction mode. I mean, it finished down 30 points. and it's how it is right now. I think the tax cuts, and I think when the Fed starts cutting rates, gold will start going up. I think the Fed will cut rates again, and the stock market, it just seems to be doing what it is. I think it'll go up more, especially on these EU trade deals. They're so hyper focused on trade, just like they were hyper focused on AI, then Trumphoria, and then there was liberation, sell off. And I do think we'll be in a bear market, just it hasn't begun yet. I think it will begin soon, but we'll see. In stocks, gold, I keep saying silver to 50, that's the next target. It's still in correction mode, but I think silver's going to 50 within the year or two. And then I think it'll break out. There's one more parabolic rise in precious metals, and then that'll be it. But we'll see what happens. Remember, just my opinions. This isn't financial investment advice. I'll see you next video.